Do you want to be a better investor? Join us to learn some tips and tricks to protect your money and make the most out of an investment portfolio. Investing can be a tricky and intimidating process, especially when you're taking on different types of investments that come with different risks. You could be rolling in profits, you could be taking on risks that you weren't expecting. That's why it's crucial to make well-informed decisions about your investment portfolio and about the investments you're putting your hard-earned money into. Join us in this video as we go through some tips and tricks to arm you with the knowledge and confidence to be a better investor. Learn how to protect your money and get the most out of an investment portfolio by diversifying and doing the research. Subscribe to Life Hacks now to stay up to date on all the tips and tricks to help you make better and more informed decisions and build a better investment portfolio. Watch this video to get started and become a smarter investor today. When it comes to investing, following the latest trends without doing your own research can be risky. Many people see the high returns with some investments generating and think they can get the same results without too much effort, but they don't realize there can already be hidden risks involved if they don't know what's coming unless they've already lost money. Relying on others for financial advice or trend information can lead to risky decisions if you don't do your own research first. The key is to make sure that you understand every detail about any potential new investment before you jump in. Do your own research instead of just listening to what other people say. That way, you can make informed decisions about the best course of action, no matter what the market does. So ask yourself, how should I rely on someone else's opinion on whether or not deciding to spend money? When it comes to investing, it's important to be careful who you take advice from. It's easy to get caught up in all the latest trends, but it's more important to do your own research and understand the details of any new investment before jumping in. Ask yourself, do I really know what my risk tolerance is? If you feel like someone may have their own interests in mind rather than yours when giving advice, trust your gut and do more research before making decisions that could have long-term consequences. So how much can we rely on others when we're protecting our financial goals as investors? When it comes to investing, it's important to know your own risk tolerance before making any decisions. Knowing what kind of risks you're comfortable with and how much risk you're willing to take is what will help you achieve long-term success with greater returns. If you don't pay attention to this, you might end up taking too much risk in hopes of making quick gains, which often don't pay off. Make sure to plan out a realistic timeline for your return on investment that takes into account both good and bad outcomes, so that way you know ahead of time if something isn't working as planned. How should we prepare ourselves mentally for the possibility of not achieving our desired outcome when trying to make more money? What strategies can we use to ensure that we are aware of all fees, charges, and commissions associated with our investment? Leave a comment below with your answer. When it comes to investing, it's important to be careful. Many investors are tempted by investments that promise high returns, but without doing their own research, they can end up taking on risk that they weren't expecting or even losing money. That's why it's important to think rationally and do your own homework before investing any money. Doing your research is essential if you want to be successful in the long run when it comes to stocks, bonds, or even cryptocurrencies. But what happens when we make decisions without doing our research or based on our emotions? How do these shortcuts affect our chances of achieving success in the long term? Making smart decisions before investing or taking any other financial risk is a key to long-term success. If you make decisions based on your investments instead of doing research and looking at the facts, you can end up with bad results that cost you a lot of money and time. It's important to understand all the details of an investment before you make a decision. This includes getting to know how the market works, what kind of results you can expect over time, and what fees are associated with that investment. Doing this will help you avoid surprises and make sure that you can protect yourself and still reach your goals even if the market takes a downturn. But how can we protect ourselves from unexpected costs like fees when we're making our own investments? It's dangerously easy to underestimate how much fees, charges, and commission can affect the potential returns of your investment. These costs are already built into an investment or a transaction, making it hard to understand them fully and even harder to accurately predict long-term success when investing. Many investors make costly mistakes by not being aware of these hidden additional expenses until after they made a decision, either because they didn't do enough research or they thought the level of risk was lower than it actually was. It's worth taking the time to research fees thoroughly before making any decision about where to invest your money over time, just so that you're well informed. That way, you can save money and have some peace of mind. How do we know if our portfolio is too heavily invested in one asset? What strategies can we use to ensure that we're aware of all the fees, charges, and commissions associated with our investments? Leave a comment below with your ideas. When it comes to investing, diversification is key. If you put too much of your money in one type of investment, then a market downturn can have a big impact on your wealth. That's why it's important to spread out your investments across different asset classes. This way, you minimize risk and maximize returns. You should also set up an emergency fund in case something unexpected happens with any single holding. This way, you have other resources available if you experience losses due to market fluctuations over time. So how do you know what kind of balance between various assets works best for you? When it comes to investing, diversifying your asset allocations is a smart move. That means putting more of your money into different types of investments so that if one of them doesn't do well, the others can outbalance out any losses. This will allow you to protect yourself against big changes in the market and make sure your investments are successful in the long run. Sometimes though, people get too excited about spending their money around and end up investing a lot in different markets without doing enough research. They don't understand the potential return on investment or ROI of each individual market, and they make decisions based on feelings rather than looking at the facts. So how do we figure out the best way to diversify our investments and get the most return when limiting our risk? It's important to understand the benefits of diversification when it comes to investing. Having a variety of investments helps reduce your risk, and not all markets will be affected by potential losses at the same time. It also helps spread out your returns on investment (ROI) over different asset classes, which can lead to more profits in the long run compared to having a more concentrated portfolio. It also gives you a chance to explore new opportunities that you may not have known about before. But it's also important to know when enough is enough. You don't want to invest too much in any single market, as this could lead to too much market concentration and put you in a risky situation if something unexpected happens. So what strategies do successful investors use when it comes to choosing where and how to invest? When it comes to investing, it's important to do your own research and understand the potential and details of any new investment before jumping in. Relying on others for financial information or trend information can be risky, so you need to know your own risk tolerance and ask yourself if you really know what you're getting into. Additionally, it's important to diversify your investments across different asset classes and understand the potential return on investment of each market. That way you can make informed decisions and maximize your profits. Lastly, you need to be aware of any hidden fees or costs that could affect your long-term success. Doing this will help you make sure that you make the best decisions for your finances and achieve your financial goals. Are you ready to make money with Bitcoin? Well, this next video is going to show you how you can take advantage of the potential of Bitcoin and how you can make further money with it. Make sure that you're not missing out on this opportunity. You're going to want to go ahead and watch the next video now so you can find out how you can get started. Thank you so much for watching, and if you enjoyed this video, make sure that you join Lifehacks by subscribing. Hit a like on this video and leave a comment down below letting us know what you'd like to see next.